Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by our Director of ETF Research, Nina Mishra. We've got two exciting picks for you, so let's jump right into the action. My top pick develops comprehensive and integrated IT solutions and products globally. The company also offers cybersecurity, technology-driven solutions to prevent things like security breaches, detect malicious activity, and even identify emerging threats. It serves enterprises, public institutions, and small and medium-sized businesses, and was founded in 1984. They're headquartered in Round Rock, Texas. The company I'm referring to is Dell Technologies, ticker symbol DELL. So Dell operates through two segments. The first is their Client Solutions Group. And I think when most of the general public hears the name Dell, this is what they think of. This segment offers desktops, workstations, notebooks, displays, and projectors. And while Dell remains a prominent PC maker and is expected to benefit from increased adoption of remote working, along with recovering demand amid the PC refresh cycle, it's their other segment that is my reasoning for this pick, and that is their Infrastructure Solutions Group. It's this part of their business that is really at the heart of the artificial intelligence boom. So this segment provides modern and traditional storage solutions, AI-optimized servers, and networking products. The top-ranked company is benefiting from strong demand for AI servers amid an ongoing digital transformation and heightened interest in generative AI applications. In the first quarter of 2025, Dell secured $12.1 billion in AI server orders, surpassing shipments and building a strong backlog. A growing partner base that includes the likes of NVIDIA, Microsoft, and Facebook parent Meta platforms has been a major growth driver. So this stock is not only highly ranked by our Zacks rank system, but it's also outperforming the market off the April lows. As we'll see, the company is firing on all cylinders. That's a bit about Dell's background in services. Let's shift gears a bit and look at this stock's industry group. Dell is part of the Zacks computer microcomputers industry, which currently ranks in the top 18% out of approximately 250 industry groups. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. Also note that stocks in this industry group are undervalued based on traditional valuation metrics, and they're also projected to experience above average earnings growth, which signifies a powerful combination that should lead to higher prices in the future. And moving to our snapshot page here, we can see that Dell is a Zacks ranked number 1 strong buy stock. The AI server and storage provider has established a healthy track record of beating earnings estimates. As we can see here, they've only missed the mark 2 times over the past 5 years. Dell has delivered a 2.26% average earnings surprise over the past 4 quarters, so they've been pretty consistent in terms of beating earnings estimates, and the stock price has reflected this. Dell is up over 70% off the April lows, and I think the move has plenty more room to run. And we can see here that analysts that are covering Dell are mainly in agreement in terms of earnings revisions and have been raising their earnings estimates across the board. Estimates for the second quarter have been increased by 14% in the past 60 days. The Q2 Zacks consensus estimate now stands at $2.28 a share, reflecting potential growth of over 20% relative to last year. Revenues in the second quarter are projected to climb 16.5% to $29.1 billion. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So Dell Technologies, ticker symbol DELL, is my top pick of the week. Shares have really come on strong as the market returns to all-time highs. I see more upside ahead for this stock. Next up, Nina will share with you her other top pick of the week.
Thanks, Brian. I'm Nina Mishra, and my top pick today is Taiwan Semiconductor. The ticker symbol is TSM. And we know that AI trade is back, and TSM is one of the biggest beneficiaries of the AI trade. And let me share my screen and talk a little bit more about TSM or Taiwan Semiconductor. So it is the world's largest contract chip maker. Apple and Nvidia are amongst its largest clients, and it accounts for about 60% of the global contract chip manufacturing market and 92% of the world's most advanced semiconductors. These are generally defined as transistors and components which are smaller than 10 nanometers. So the company recently reported excellent results, and despite all the tariff related concerns, it reported very strong quarterly results and also reaffirmed its guidance for the year. And its revenue was up 42% and net profit jumped 60%. High performance computing is one of the major growth areas. It accounts for almost 60% of the revenue. And let me show you a chart from TSM's presentation. So this is first quarter 2025 revenue by technology, and you see by platform here. So high performance computing, which includes AI applications, that is one of the major growth areas. Now, it also recently reported its May revenue, and May revenue was up about 40%. So the company is set to report its second quarter results on July 17th. So expectations are quite high. Currently, the stock is rank number 2, strong buy stock, because after reporting those strong results, you will see that analysts, if you look at the detailed estimates tab, you will see that analysts have been raising their estimates for the current quarter and next year, and that sent the stock to buy rating because of rising earnings estimates. And if you look at the earnings surprise history for the year, it's been consistently beating analyst estimates. And if you look at the longer term price consensus and EPS surprise chart, you will see that in the last 5 years, the company has missed only once. And the stock also pays a dividend, not a great dividend, but still there's a dividend, and its balance sheet is solid, cash rich. Now, one of the main concerns with the company is that most of its production is currently in Taiwan, and there's always, there are always headlines regarding the threat that China may invade Taiwan. So I just wanted to say that China also depends on TSMC for the supply of its advanced chips. So the likelihood that they will disrupt that supply chain is rather low. And the company is also trying to address geopolitical fears by expanding their manufacturing footprints outside Taiwan into Japan in the US. In fact, they recently announced that they will be investing at least 100 billion or more in US chip manufacturing plans over the next 5 years. Now, if you look at the stock price performance, it's up about 13% year to date, but it is usually volatile because the stock is often driven by tariff and geopolitics related headlines. So there are often opportunities to buy this high quality stock on the dip. So I think Zach's rank of number two and its presence in the global AI manufacturing chain, its critical importance that makes the stock worth a look. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with two more interesting topics.